Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 2nd of June. And yesterday we began our podcast by stating, quote, "To all silver bugs out there, it is a glorious day," as we saw silver exceed the $18 mark, unquote. Not just by a little, but actually quite positively, and at one point actually reaching $18.41. Now, we've placed a link to this video in the description box below, and it has gained, in fairness, a fair bit of attention, certainly for this channel. Now, we made it very clear yesterday that whilst we believe that silver will, at some stage, in the not-too-distant future, test the $19 level, what we are more likely to see, short-term, is perhaps a minor pullback and an operating range, or a vacillation range, within $17.50 to $18.50. In fact, these were our exact words, quote, "Of course, we are going to see movements really between $17.50 to $18.50, and then potentially a step up from $18 to $19, but we're not quite there yet," unquote. Well, today we have seen a pullback, with silver actually dipping to as low as $17.81. with a now $17.50, $18.50 range. And this happened a little over 3 hours ago. But at the time of writing, which is 20 hours 40 minutes, GMT plus 1, it has regained some composure and stands at $18.07. This was to be expected and could still be viewed as a positive situation. Now, before we comment further on this, we highlighted in Saturday's weekly update that this week we shall see a considerable amount of economic data being published in the United States, much of which could have the power to affect markets, obviously depending on how those figures panned out. Now, today we saw market manufacturing figures for May come in at 39.8, unchanged in fact from April's figures. The ISM manufacturing index for May was also published at 43.1%, better than April's 41.5%, but a little less than forecast, which was 44%. Construction spending for April was minus 2.9%, compared with zero change in March, and better than expectations of minus 0.68%. So this news, frankly, was quite positive, if one can view such low figures as positive, of course. Now, equity markets have risen today, and again at the time of writing, the Dow is currently standing at 25,606, that's up 0.5%. The S&P 500 is standing at 3,061, that's up 0.18%. And the Nasdaq Composite Index is 9,568, and that's up 0.17%. Now, European markets closed up today as well, between 2 and 3.75%, while overnight, most Asia-Pacific markets were also up. We shall have to see if that follows through this evening. Now, we have mentioned silver. Let's take a very brief look at gold. Currently, its price is standing at $1,728, down a little today, but producing a gold-to-silver ratio of 95.6 to 1. Remember, we said over the past 2 weeks to expect the gold-to-silver ratio to fall, but probably as low as the early 90s. Not much lower than that is our forecast, at least. Now, the slight concerning factor today is, of course, the fact that the US dollar index is down, and it's currently at 97.7, and yet precious metal prices have fallen, albeit not a huge amount, but a fall nevertheless. In addition, a report from the Atlanta Fed showed a 52% fall in Q2 GDP. And so this should have really been quite heartening for gold and silver, or certainly for gold. And we saw gold actually fall below support levels of the 10-day moving average of $1,727. However, we have to say that short-term momentum has turned positive, which may be reflected in the next couple of days. Now, silver markets, as mentioned earlier, also fell but regained composure in the last couple of hours. On the downside, we could see the next support level as low as $17.25, though we're of the opinion that $17.50 will be hard to breach in a downwards momentum. On the upside, of course, $19 is the current holy grail, so to speak. But again, we stated yesterday, $18.50 will be highly resistive. Now, we have to bear in mind that silver has performed well in recent weeks. In fact, in recent months, from its lows in mid-March, and especially in recent days. And so a pause for breath should neither be surprising nor worrying. In fact, we believe it would be healthy for silver if it could actually rest a little below $18, consolidate for a little while before then making the next move upwards. Now, we shall have to wait and see if that happens. Meanwhile, watch the equity markets and the geopolitical situation. Now, tomorrow we have motor vehicle sales, but much more pertinent economic data to be announced on Wednesday. Also, in terms of background information, the United States is challenging what it deems to be unfair tech taxes, or technology taxes, in the United Kingdom and the EU, and it has launched a formal investigation into these over concerns with how American tech giants like Facebook, for example, are being adversely affected, which could lead to trade tariffs in response, or at least this is the fear. Also, controversially, the president is suggesting that Russia should be allowed to return to the G7, and in fact he said on Saturday he would postpone the G7 summit scheduled to take place this month until September. He said that the G7's, quote, outdated group of countries, unquote, should be expanded to include others, including Russia. And on Sunday, the president, Mr. Trump, told Russian President Vladimir Putin of his plan to invite him to the summit. Now, this is on the back of the president last week removing funding and backing from the WHO, which amounts to some $400 million. With the president now engaged in a level of internal strife, to add to his woes, recent betting polls, not just opinion polls, but betting polls, i.e. bookmakers, are placing Joe Biden ahead of Donald Trump in the forthcoming November presidential election. Now, it's still a long way to that election, but the president cannot be too happy in seeing these figures. So this is undoubtedly an interesting time for markets, the dollar, and precious metals. Now, for the moment, equities are clearly discounting any bad or negative news, and are focusing on the lockdowns easing, and therefore looking to the positive side. And some economic data being published is not as bad as anticipated, and therefore equity markets are taking this as a rather bullish sentiment. Now, for how long they can continue to do this remains to be seen, but some analysts, not all, not necessarily the majority, but some, and when I say analysts, I'm not talking about pumpers or those who traditionally just wish to declare that the stock markets are going to zero, etc. But I'm talking about serious analysts are voicing quite loud cautionary words to expect equity pullbacks by as much as possibly 3,000 to 5,000 points, again taking it down potentially to that 20,000 level. Although we have seen in recent days some of the major banks actually suggesting that equity markets probably will only fall by a little and have some quite serious upside to them. So analysts, investment advisors are split. But it's worth noting some of those who are heralding caution. Now, if this does occur, that is, a fall in the Dow of 3,000 to 5,000 points, then we shall definitely have to add another 5% to the price of gold and 10% to the price of silver. Having said that, if they continue to rise and the economic data continues to improve as the high levels of stimulus works its way through the marketplace, then these will act as headwinds for precious metal prices. though arguably silver will be less adversely affected because of its industrial demand component. On lighter news, and this is certainly for President Trump fans, in the United Kingdom, McDonald's has announced today that it aims to have 1,000 of its United Kingdom and Ireland drive-through locations running by Thursday. And interestingly, for those that are open today, many have reported massive queues. You see, some of the lockdown regulations have been loosened, and we're already seeing family gatherings reoccurring and more shops beginning to open. This is obviously good news for the economy, and it will be interesting to see how the pandemic figures move over the next couple of months. Meanwhile, we suggest that certainly taking the medium to long term in mind, any falls in the price of gold and or silver should be seen as a positive buying opportunity. We still don't think there is any need to chase the price dramatically and to look for those situations where they exist of lower, if you're buying the physical, of lower premiums. But that said, at this moment, we think there will be some oscillation, certainly for silver between 1750 and 1850 in the short term. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.